We are in Cannes at Mipim 2022, and we are joined by Mr. Brian Klinksiek, Head of European Research and Global Portfolio Strategies at LaSalle Investment Management, and Lisette van Doorn, CEO Europe at the Urban Land Institute. Lisette van Doorn, Brian Klinksiek, thank you for joining us.
Thank you.
Thank you.
You are just getting out of a conference entitled ULI Emerging Trends in Real Estate Global Outlook 2022. What are the main trends identified by the various panelists during the conference in relation to the evolution of the property market this year? Maybe I can start with Mrs. van Doorn.
Yes, well, thank you for the invitation. But the main trends are really something we've already seen for a while. It's about inflation and the uncertainty around that. And that's only been intensified by the recent events we've seen with the Russian invasion of Ukraine, where inflation obviously is even higher and expected to stay longer. But maybe, Brian, you want to add?
Yeah, I mean, the direct real estate implications in terms of the real estate in Russia and Ukraine is pretty minor. It's a very small share of the real estate investable universe. My firm has no offices or any assets in the Russian and Ukrainian markets, which are most directly affected. So you really have to look at those indirect impacts, and the biggest one, as Lisette says, is inflation, and bringing quote-unquote bad inflation, the kind that isn't generated by the fact that the economy is at full employment, at an unwelcome time for inflation. That's the most significant impact. I think the other thing is just a general risk-off sentiment in the markets, which sort of remains to be seen how that plays out.
Okay. I have also to go back to a previous crisis that is still very much in the present as well. Hopefully we are getting out of the pandemic, but we still have to deal with the coronavirus at the moment. The pandemic has obviously disturbed global real estate markets over the last 2 years. How do you see the different sectors and geographies evolve in 2022 as we now hopefully come out of this crisis?
Well, I'll start. One of the most remarkable results of the report, the ULI Global Emerging Trends report, was to show in Europe that the biggest, most important cities really still are front and center in what investors are targeting. We're talking about London, Paris. There were questions whether work from home and commuting times would cause those cities to fall away in their attractiveness in the way that some of the Sunbelt places in the US are really at the top of the US rankings, the more suburban types of environments. So there's a clear difference between Europe and Asia really on the one hand and North America in terms of where investors' preferences have headed. But I'll just say one more thing, which is that the most remarkable, I think it's a remarkable moment being able to be here together in person at Mipim 2 days after France dropped the mask requirement. And everyone here is taking a calculated risk, right? Yeah. That we'll come home and have to spend some time feeling a bit funny, but we take that risk because of the remarkable achievement in science and innovation that brought us these vaccines. And then it's worth it to be together and have that in-person interaction and see in person people you haven't seen in a long time. But I said one other thing at the end, which is of the panel, which is that I'm not in a party mood. We have war in Europe. We have a humanitarian crisis. We have the climate crisis. And so I'm trying to dedicate my Mipim, to advancing the those agendas, which was a big part of the panel today.
Yeah, indeed. And I wanted to add more also on the sector perspective, where actually we saw a pretty common view across the different regions, which was interesting because normally there's much more variety between regional outlook in terms of sectors that are offering most opportunities. And interestingly, a lot of long-term trends that we're seeing are very well reflected in that, where you have technology and demographics and obviously climate. And in that respect, we saw logistics and residential standing out across the different regions. While for logistics, there's much more debate now on pricing levels, obviously. And you see a much more granular approach. One logistics building is not the other. Residential is seeing a huge support across the different regions, where in Europe and the US, it's also the social aspect that adds to that interest. And then there's the whole focus on what we call operational real estate, realizing that real estate is a sector in transition, almost from business to business to consumer, and that it requires a hands-on approach, even for the sectors that were in the past considered as, say, traditional, where you agreed the long-term contracts and you your tenant was there for the next 10, 15 years, and by the end of the contract you kind of followed up on the conversation. That's gone now. Real estate as a whole is far more operational. It's about what does the tenant want? What does the user want? That's not always the tenant, for example, in retail. It's about ESG. It's about employee well-being. And I think that's so much more, and the services you can provide. And interestingly, a comment was made that in times of higher inflation, actually those additional services can almost provide a sort of inflation hedge, which you can price more flexibly and offer more flexibly. And I think that was an interesting comment too.
Interesting. We alluded to it in the first questions that I asked, but I still want to come back a little bit just to make sure that I understand, because it obviously is a situation in flux. You mentioned the war in Ukraine, its impact on inflation. There is a lot of uncertainty. At the same time, there are other crises. We talked about the pandemic, but you also mentioned the ESG and the environmental crisis. A lot of uncertainty on the market. How do you see this uncertainty maybe affecting real estate markets and investors going forward?
So I think, in the immediate post-pandemic environment, we saw a huge polarization between favored and unfavored sectors. And so if we were talking a year ago at the Mipim, that didn't happen, we would be talking about sector selection. And today, what we see is the beginnings of a recovery and return of some sense of what the future will be like for the unfavored sectors, the pandemic loser sectors of offices and retail. And that capital is returning to them and seeing opportunities and value there, but it's becoming much more about stock selection. I think the biggest impact on real estate markets of this ESG and sustainability considerations is separating almost, some people say it's bifurcation, and I'll probably call it trifurcation, because it's the assets that have those credentials in terms of sustainability, in terms of wellness, from the assets that don't have them but could have them. And those are opportunities to invest and improve and value add, versus the stranded assets that it's really difficult or impossible to get there. And those are the new unfavored sectors. Those are the new loser sectors in the market.
Interesting.
Yeah, I would like to add on the crisis that however this may end, and hopefully it's sooner rather than later, what we already know is that there will be massive long-term implications, which for now are just questions, because we don't have the answers yet. But the energy transition, the economic dependencies, where government budgets may shift from housing, infrastructure, to defense. And what does that mean for real estate? The energy transition and the short-term versus the long-term impact. Will, on the short term, we go back to even more fossil fuels? And on the long term, we know we need to speed up that process, which obviously also has very big implications for real estate. So there are a lot of question marks, but we know there will be even more change than we had already anticipated.
Great. Lisette van Doorn, Brian Klinksiek, thank you very much for your time and for your insight. Thank you all for joining us, and see you soon on BiTV.